What's up, y'all? Got another video for you. A little bit of a different angle. I need to get a holder for this phone. But in this video, I want to talk about the year 2022 and the year of the drawdown, right? So we're used to this. We're used to a market that just keeps going up, doesn't stop. You know, it just keeps going up and up and up. You know, like in starting from March 2020 until present, right? Well, not till present, till about, I'd say, November 2021. That's when the drawdown, the big drawdown, officially began. Now, anyone that can tell you and say, hey, that they know when a drawdown is going to happen is usually wrong. And no one can predict the market. No one knows what it's going to do. No one has any idea. So, you know, from 2020 March up until November 2021, it was a market of buy the dip. And it worked, right? Well, it's actually been buy the dip market since 2009 of March. And, every once in a while you'll get these drawdowns, like significant drawdowns where the dip just keeps on dipping, right? And you're starting to second guess your trading plan or second guessing your investments. And some of these investments, some stocks, major names in the S&P have drew down quite a bit. 50-70%, right? A lot of these growth names we're used to that just keep going up and up, right? The well dried up. Everyone's in, and there's no more buying pressure. And there always comes a time when the buying pressure dries up. People that are in or that are in early start thinking, well, I need to start taking some profits, right? And then that's how the tide turns. So back to just 2022 and what this means, right? You can't see this drawdown coming. I mean, unless you trade on a short-term basis primarily, or day trade, right? If you're a long-term trader, these drawdowns sneak up on you, right? They sneak up on you, and by the time you realize it's a drawdown and you realize it's actually pretty serious and the dip may keep dipping, you're already in too deep. So what can we do to prevent that? You can't. I mean, there's trade-offs, right? You can, and like I said before, if you want to become like a swing trader or a short-term trader, day trader, right? Then you have to dedicate a lot of time, right? But this video is not for those people. This video is for the people that are for the long-term investors, right? People that just want to invest in the markets and not have to lose their ass, right? So just understand that these drawdowns do happen, and you have to be willing to hold your long-term investments. As long as the company, if you invest in individual companies, not just the S&P, right? As long as the individual company that you're invested in, as long as your investment thesis doesn't change on that, or it takes a 180, or they do something that you don't like, right? As long as it's the same for when you started investing and you still believe in that company, you keep buying that shit. You keep buying it. Keep buying that dip. And then if you're thinking, well, with what money, right? Well, you gotta find ways to earn money, right? So, That's the money that you put into the market. That's money that you have to think about when you put in. Just think of it as gone forever, right? You know, and you're probably thinking like, why would I think that money is gone forever? Well, if you're gonna have a long-term view on something, you need to hold it long-term. I'm talking like 10, 20 years, right? And or even longer, or even something that you could pass down to your kids, you know, family, whatever, right? And there's now tools and investment vehicles that offer, you know, you the ability to take out loans against your investments, right? You can take out loans against your investments, pay a small like 2% fee, 1% fee, right? And if you think about it, it would actually save you a ton on capital gains taxes, right? So like if you were to sell your stock outright, just sell it outright, take the cash and run, you got to pay capital gains on that. Not a lot of people realize that either, right? You're paying, depending if you hold for less than a year, you're paying quite a bit depending on your tax bracket, right? So, you know, paying 1% to 2% to borrow money against your investments, that's a deal, right? So think of it this way, right? So you want to park your money in there. You're like, this is what I'm holding, right? And you want to primarily, if you're a long-term investor, primarily put it into the S&P 500, park it in there, right? So I just want to say that investing long-term is the key to avoid these drawdowns. There's no secret sauce. There's no secret, secret strategy, right? There's no nothing that's going to prevent you from experiencing these drawdowns. These drawdowns are necessary. It's necessary to experience them. You have to go through them. It's just like life. You can't truly enjoy the highs, right, without trudging and going through and getting your hands dirty and going through pain at the lows, right? You have to go through that. And when the highs come, it's just that much sweeter, baby. That's what it's all about, and that's pretty much the gist of it. A lot of people are getting freaked out in the markets, right? People are cashing in, thinking that we're going into a recession. I just gotta say, look at all the past recessions and look at where we are right now, right? No one's opinion, no one's thesis, no one's idea of what's going to happen can trump that, because those are just opinions. You got to look at the facts, and the facts say the market just consistently goes up, right, for over a century. So I mean, if this has been going on for over a century, and if you think that you're so special that this specific time in the market is the time where the S&P 500 goes to zero, you got an ego problem, because you ain't that special. So, and on the off chance, on the tail end chance that it does go to zero, you got bigger problems. We got bigger problems in this country if that happens, right? So your money is probably worthless anyways. So just think of it that way, right? You park your money into the S&P or just in stocks, or crypto, and you leave it in there. And that's it. It's gone. Don't even mess with it. Don't touch it. It's a long-term investment. That's what you do, right? And just leave it. Keep buying more. Set up an auto payment or auto deposit at your brokerage. If you want to, I really, for my long-term investments, I use M1 Finance. And I have a referral link in the description, so if you want to use it, it's so awesome because I don't even look at it. Every week, I'm depositing money. It deposits, and then I pick the exact stocks that I wanted to invest it in, and it'll take my deposit. It'll auto deposit every week, every Friday, and then it'll disperse the money throughout all those stocks. I don't have to do anything. And then every once in a while, if you I believe you could go in and rebalance it. Like if one of your stocks is running, right, and it's getting overweight, right, compared to your portfolio, you have too much profits, right, you can rebalance it. So it'll take profits, keep it back at like a 5% allocation, right? You can set like an allocation per stock, right, and then boom, they'll do it all for you. So there's like no excuse to not have a long-term portfolio. Just every week, every month, whatever you want. I prefer every week because you smooth out the volatility much better that way as you buy every week, right? Because you buy at different price points, and your averages are a lot smoother. You have a lot smoother trajectory upwards. So yeah, use the link. I don't even know if I get anything with the link. It's just my referral link. I think you may get something. I think you get like a few bucks to invest, right? And I guess it depends how much you invest, but I'm not here for that. I'm just saying, like, I put my whole family on it, on M1, and it's great because like especially my parents, they're older, right? But they've been wanting to invest, and I'm like, man, before I was like, I just have no way to take the time to manage their portfolios as well, So it's the M1. It's so easy. You set it up and that's it, one and done, and keeps them happy. They're invested, right? So yeah, keep the long-term game in mind. All this short-term bullshit, all this short-term drama, don't even think about it. It's nothing. It's all noise. At the end of the day, in a year from now, all this news, all this shit going on in the world, everyone's going to forget about it. There's going to be new drama. That's all it is, man. I've been in this market for over a decade, and I know. I've been there. I've been scared. I've been trying to time markets, right? And it doesn't work. At the end of the day, like, I even look back at old posts, like old, social media posts I post about, like say, Google and Apple. And I'm like, man, look how low they were, right? Like Google was in the 3 digits, right? Low or mid 3 digits. I remember Apple before the stock split was like, before, not this past stock split, but before the last stock split, like I think it was like 2015 or something. And you see the share price. I'm like, man, why the fuck was I just stupid and just trading? Like, what if I just fucking bought and held? So I'm just trying to relay this message, and hopefully I get through some of y'all that, man, just fucking buy and hold, man. Because once you get up there and once you do this long enough and you eventually realize that, damn, I should have just fucking held. The fuck? I'm wasting all this time trying to time markets. It ain't worth it. You buy and just hold and leave it. And I say, go on about your life. Build that business that you want. Do that venture that you want. Go on vacation, or I don't know, whatever. Like, use that time for something else. And you could even be more productive as your investments work for you, and you're not hovering over them like that micromanager at work that looks at you and sees what you're doing all the time, right? You don't have to be that guy. You don't have to be that micromanager. You let it work. You know what it's gonna do. You know what you stay on. Just know the big picture of those investments. Know what they're gonna do. Know what their plan is. If you agree with that, then just fucking keep buying, man. That's it. That's all, man. That's all I'm gonna say. Peace out.